And this is, of course, your daily financial news. It is Monday, February 28th. I hope you had a wonderful weekend. I hope you're having an awesome Monday. A couple of things as we get started. First and foremost, let's congratulate three more folks for getting their first or next deal. Pam, congratulations for getting your deal. Lorena, congratulations for getting your deal. And Joshua, congratulations for getting your deal. Folks, these three have put us at 450 deals. This channel, all of you out there, have closed 450 deals in 3 quarters. We need 50 more, 50, to hit this target, and we have 13 weeks left to do it. So I have every confidence that we will do it together. I know this market is hard. I just ask you to keep doing the work, understand your buy box, understand average, and all of that good stuff. As for my puppy updates, I don't know if you have seen Sunny, but yes, my puppies are wearing cones. They have been, I guess it's called spayed and neutered yesterday. They are not happy. They're not happy. Happy is actually at home with Olivia, and I have Sunny this morning. So they are cranky, or yeah, they're just not their joyful self, which I'm sure you can appreciate. So send them your love. Hi, buddy. I know. Send them their love and support. I'm sure it does not feel good. On to the daily financial news. We have to talk about what's going on in Europe. More specifically, as I talked about over the weekend, I firmly believe that the Russian citizens, mom and pop Russian citizens, they could very easily push towards a resolution faster than their leaders want. Yes, Putin is a dictator. Yes, he has shown very odd behavior. However, what is going on in Russia at the citizen level is painful. And we have seen citizens rise up and replace governments before. Let's hope that that happens again. A couple of very interesting things that are going on. Russia's central bank has ordered the stock market participants, think, on Wall Street, we have these money makers. So they are been ordered not to process foreign orders. Yep, people are looking to dump their Russian stocks, and they're basically being given the Heisman, which is like, nope, we are not going to execute your sell order. Next up, the ruble. I talked about this over the weekend as well, was going to crash. And sure enough, it even went down farther than I expected, 28% in a day. And that is after last week's. I think last week had a 28% collapse as well. This means the Russian citizens, and why I say they have the power, they are likely to start to see inflation in excess of 70%. 70%. 70%. Folks, you ask me all the time about hyperinflation. The rule of thumb, hyperinflation is 50%. In case you are wondering, 70 is greater than 50. So Russia citizens are going to see hyperinflation. In addition to that, Russian assets are toxic. People are dumping wealth funds and the like. It is being frozen out. Russia banks. There's a bank called, God, how would you pronounce that? Sberbank? Horribly done, but you're going to get the picture. They are likely to fail. They are seeing wide, rapid withdrawals. Apparently, this bank has branches in other European countries, and those citizens in those countries are taking their cash out, meaning this bank, Russia bank, will likely fail this week. As expected, oil is up. The 10-year is down again. Folks, if you're not reaching out to your mortgage broker to lock a rate in, right, especially like Matt, the mortgage guy who speaks to us Wednesday, if you like it, lock it. If you have that opportunity, you have been given a gift. Goldman Sachs is actually calling for oil to exceed $115 a barrel. Other interesting things going on in the Russia economy. FedEx and UPS have suspended shipments in and to Russia. Wow. BP has dumped their stake, their nearly 20% stake, and will likely take a $20 billion charge off. Wow. Wow. Other things going on this week, we have Jerome Powell. He is speaking twice. Things that I am going to be looking for is any signs that Jerome Powell is looking at what's going on in Europe and hesitates. We have wicked inflation here. It is going to get worse. I believe Powell is going to wimp out and not do 50 basis points. I firmly believe that is the right thing to do. We need to nip this in the bud. We need to be more like Paul Volcker than Ben Bernanke. I just think Powell is going to wimp out, and he is going to be Ben Bernanke. But we will see. We will probably get indications this week. I have a question about Elon Musk. This is a serious question. I thought this yesterday. I don't know if you heard this, but apparently the Ukraine has been suffering internet outages. Shocking. Good old Elon Musk was asked to bring up Starlink. Honestly, don't even know what Starlink is, but apparently it is a bunch of satellites to facilitate internet access. So I'm just curious, is Elon Musk Tony Stark? I mean, seriously, at this point, do we just get him an Iron Man outfit? I'm just curious. That's what I was thinking. I'm like, this guy's like Tony Stark. And if you don't know who Tony Stark is, he's an action hero. Hero? Yeah, he's a hero. Yeah. Anyways, I'm just curious. Elon Musk, Tony Stark, anybody seen them in the same room together at the same time? Something we're going to be talking about with Greg Dickerson today. Again, he's the gentleman they called the Great Deleverage. He has a playlist on this channel. Is the fact that we might be reevaluating risk. Risk is being reevaluated. It's really been reevaluated the last couple of months. But is what's going on in Europe going to cause another reevaluation of risk? I did see a note that peace talks, have potentially started between the UK, Ukraine, and Russia. I hope they go swimmingly well. I hope a ceasefire is called. I hope Russia goes home and Ukraine starts the rebuilding process. I don't think that happens, but you can certainly wish for it, right? So let's hope the peace talks work, ceasefire is called, and we can stop death and destruction. Don't know if you saw this morning, but I had to double check. Russia's central bank doubled, more than doubled, what we would call the Fed funds rate. You are not going to believe what their Fed funds rate is today. 20%. Folks, the central bank rose it in a day from 9.5% to 20%. What does that mean? It means that the central bank is afraid of a bank run. It is trying to build confidence. It is trying to convince everyday citizens to leave their cash in the bank. 20%. However, don't forget, we did talk about 70% inflation. So if you subtract 70 from 20, what do you get? You get negative 50%. Folks, you have to take interest rates above inflation if you want to encourage people to save. Paul Volcker taught us. No other central bank has had the balls to do that. And even at 20%, Russia is not there. It sounds impressive, But when you are losing 70% to inflation, 20% might as well be 1%. It is that bad. Looks like a couple of things on the economic front. One more thing for Russia. Shipping giant Maersk, I don't know, is looking to suspend all deliveries to Russia, again, freezing their citizens out. On the business front, it looks like Chevron is buying renewables energy giant for $3.15 billion. Again, all cash. I expect all cash transactions to go up as we exit this environment, as people look to deploy cash. I think I just saw a little comment that said somebody's closing a deal on Wednesday. Yay! When it closes, send me a note. We will include you on the count to 500. And then finally, Goldman Sachs. Goldman Sachs is coming out and saying, watch wage spiral inflation. We are right on the cusp of seeing a feedback loop of higher wages leading to higher prices, leading to higher wages. 1970s, folks. I told you this was coming. They now are calling for the Fed to raise 11 or 12 times in a row. Folks, that means they will be raising into 2023 and taking the Fed funds rate potentially to 3%. If the Fed funds rate is 3%, that means the 2-year is probably 4.5%. That means owner-occupant housing is probably 6, 5.75, 6. Investors, we might be at 7. Again, these are if these rates happen. Remember, what did I telling you? What have I been doing with all of my portfolio? 30-year fixed rate money. If you don't know, if you haven't seen my discussions with Stephen Dow from Velocity Mortgage, I want you to hear me here. If you have a commercial property, 5 units and above, you may not be aware that you can get 30-year money. You may feel like you can get 5s, 7s, or 10s adjustable rate mortgage, 25-year AM. It doesn't have to be that way. S. Dow, D-A-O, at velocitymortgage.com. He got me 30-year money on apartments and an office building. And I am so thankful I took that action, call it 6 months ago, maybe 5 months ago. So again, don't get trapped in a rising rate environment. Watch all the brokers pushing adjustable rate mortgages. Yeah, sure, an adjustable rate at 2.8, or you can get 30-year fixed at 4. What happens if it adjusts 2.8 to 7? Folks, go back and look at my 50-year spreadsheet. It's in my free course. It's in the paid course. It's in the bonus section. Just look at 1970 to 79. If you want to extend it to 81, 82 to get the real full pop, look at what happened to housing, wages, payments, all of these things. It's not about price. It's not about interest rates. It's about price, interest rates, and wages. If wages go up, housing could go up even with higher rates. It's a math formula. All right, folks, it's Daily Financial News. We'll be talking to Greg Dickerson here in a little bit. At 10 o'clock, I get the joy of talking to a student. I'm having a mentoring session. If you ever wanted to have a mentoring session with me, I do now offer that as one of my course options. I think it's $649. It gives you everything that the base course does, plus 30 minutes of my time. Hope you enjoy today. Have a wonderful day. And again, send some love to my puppies. They're not feeling very well today. Hi, buddy. Yeah, I know. Okay, take care of yourself. Bye-bye.